You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it is time to rock out once again with your favorite motley crew of optioneers. Yes, it's time for the Option Block. My name is Mark Longo from the brand spanking new, super cool, super lovely, theoptionsinsider.com. Kick the tires, light the fires, love it, embrace it, make it your home. Make it your homepage. It's a good place to have if you haven't done so already. We'll keep you informed, up to date, and just educated, enlightened, entertained, all the ease you could possibly ask for, and more. And, of course, makes it easy to get all your show fixes all in one place as well. And, of course, however you listen live after the fact, hit us up. We do like to hear from you. Questions, comments, insights, pearls of wisdom. Yes, indeed, we do like to hear from you guys. And let's see who we're hearing from today. Let's see who's joining me on the old program today. Let's first go out. Let's spin the wheel. Here we go. It lands deep. Not in the heart of Texas, but far, far away from Texas, in the heart of Maine, where we are joined once again by the rockiest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Now, Mr. G, I have to ask you, it is the greatest of all national holidays, so I have to ask you, have you done your civic duty on this greatest of national days, Prime Day? Have you done your civic duty to our Amazon overlords and made at least one purchaser?
You know what? I have to say, I have not. Actually, you know what's I'm gonna give you the guess how many things I myself have purchased on Amazon.
I'm gonna say
what's the over under?
Over under 5, and I'm gonna say 3 because you're a bit of a Luddite.
Dude, you would be very close. I made 4 purchases on Amazon.
See. Do I know you or what after having done the show for you 8 million times?
You hit it so on the head. My wife, on the other hand, probably does 4 per week. But we don't go out shopping anymore either because we live in the hinterlands. However, I do like my hardware store very much, my local hardware store. So, we have a great store called Bath Industrial.
But can your local hardware store get you a wrench in your hands at like 2 a.m. when you want a wrench? You know, can they do that?
Well, not at 2 a.m, but Anyway, so
anyone can get
I
you.
bet if you bought enough wrenches, though, they would.
Yeah, I guess.
they might. Now, it doesn't the Chinese have Baba Day? Isn't there a Baba Day like Amazon Prime Day?
Yeah, I think it's called Singles Day over there. It's like the big shopping day for them. Or maybe
Singles
Baba
Day.
has their own version. You're right. I don't know what they call it. But we're just talking. We're being national. We're being xenophobic. We're being nationalistic here today, sir.
Good. We're
Yes.
xenophobing out. All right.
The great national holiday here in America, at least America, is Prime Day. And that other voice you heard, listeners, of course, is Uncle Mike TOSAW. I know I don't even have to ask him. He's probably made 27 purchases just since the show started. Uncle Mike TOSAW, St. Charles Wealth Management, welcome to the show. And how goes your great national holiday, sir?
Going well. I've made more than 4 purchases on Amazon in my life, but my wife typically does more of the Amazon purchasing in our family, I have to say.
I'm surrounded by traders and Amazon Luddites. Let's see. Let's go to the hot seat. Maybe they can help me here, where we are joined by the last dad of Krypton, Trey Jarrell, holding down the Fidelity hot seat. Trey, help me out here. I can't be 0 for 3. Have you done your civic duty here on Prime Day? Have you tithed to our great Amazon overlords?
Well, I'm doing my civic duty by coming on the show and letting my other 3 colleagues sit at their computers and click away. I think they all wanted to take the show off today to do their own purchases, but haven't done it yet. I always say I'm not going to, but Amazon popped up on our orders by Fidelity customers. I'm like, let me just check the news on it, see what's going on, and then of course every headline is top 10 deals, and I've started to fall down that rabbit hole. So I'd imagine within the next couple hours I'll have a couple of purchases under my belt.
I need to get the last emperor back on. So, he's shopping away right now. So, yeah, I know one of you guys is, and I get the feeling he might be the Amazon guy. All right, so we got a bunch of notorious traders here on the show, listeners. As we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, listeners, as I prepare for our Amazon National Police to come scoop up these Amazon Act defilers here, let's see what's going on in the rest of the market. It's kind of an lunch day, as you might expect. Everyone glued to their keyboards, not trading, but shopping, looking for deals. So most of the major indices kind of shrugging, kind of saying, we got other things to do today. S&P kind of leading the slight move to the downside that we're seeing, off about 0.15%, to the Dow about 0.1%. NASDAQ kind of hovering around unch territory. Bit of an odd one for NASDAQ today, in terms of usually they like to rocket somewhere. Today that is kind of hanging out. They're trading as well. Crude WTI taking a little bit of a drift down, shy of the 60 handle again. So those of you watchers out there, keeping an eye on that. And our old friend VIX Cash on this kind of getting a little bit of that weekend back. Up about half a handle today, right around a little bit shy of the 13 handle, coming into showtime. Now let's go back around the horn. Let's go back the opposite of the way we came. Let's start in Fidelity land. Mr. Trey, you said Amazon trading it. It's funny, the market not liking. Maybe the market's too busy buying stuff on Amazon to actually buy the stock today, because the stock taking a nice little drubbing here, off about nearly 5 handles, or about 0.25%. It's a paltry percentage move. Decent point move, paltry percentage move. Amazon still north of the 2,000 handle, 2,006.40 coming into showtime here. So the market not liking the stock, if they are indeed liking the deals. Trey, what are the crew at Fidelity? What are they trading up today, sir, when they have time to trade and not shop?
Yeah, so Amazon, believe it or not, did make the top of the list right now. So, and as you mentioned, maybe market not liking it. Fidelity customers are liking it here today. A little bit heavier on the buy side right now, about 56% of the orders coming through buys versus 44% sells. So definitely seeing some Amazon love from their side. And, have been keeping an eye on this chart. It's, felt like kind of this interesting point right at this 2,000 level here, back and forth the last few days. Really the next, major point above this, right, or, right near its all-time high. So it'll be interesting to see if, Prime Day can be the catalyst that gets it back up to that point or not, but certainly one we'll be keeping an eye out on here as well. Option market, pretty interesting in Amazon today too. Maybe not, too out of the ordinary. A little heavier on the call side today. about 45,000 calls to 32,000 puts, and looks like a little bit majority on the sell side here as well. So I'll be keeping an eye on it here. I'll try and avoid the news the rest of the day. That's how you get sucked into learning about some of those prime deals you didn't know about. Couple other ones that kind of caught our radar here today. Our top five, really a lot of usual names. AMD popping up here again, Apple again, Netflix. Also coming up today, just out of the top 10, and what we haven't talked about here in a little while was Facebook here. So kind of had the nice jump on Friday after that FTC announcement came out. Fine of $5 billion seems pretty big, but in the scheme of Facebook and the amount of income they make, market and participants tended to like it, driving the stock up today. Coming down just a little bit here right now, down $1.21 at 203.65 as it stands right now. But also kind of this interesting point from a chart standpoint, right? It's really had a nice run up here since the end of our beginning of June, around 164 up to this 203 level that it's at now. This at the same level that we had trouble with breaching back in June of 2018 before it finally broke through to get to its all-time highs here as well. So another one we'll be watching at this level, see if it can penetrate through and take us back near that 218 or so level that its highs were before. And if it can't manage to see that momentum push it through, that 200 even level was certainly another interesting point. We'll be keeping an eye on to the downside here as well. Option market in Facebook really heavy on the call side here today, right? 120,000 calls to 44 puts, so almost a 3-to-1 call put ratio. Again, the sellers seem to be leading the way, right? More call sellers today than call buyers, more put sellers here today than put buyers. So kind of interesting, action on Facebook, here overall, and one that's usually in our top 10, but hadn't talked about it in a while. I thought that news Friday was fairly interesting here. And one other name that came up today that is one we don't see too often, but a very big mover, biggest mover on our list of orders by Fidelity customers was Symantec here today. So stock down right now, down $3.69, which is a little over a 14% drop. They were in advanced negotiations with Broadcom. Broadcom was attempting to purchase them out. But announcement today was looks like the deal is falling through. Symantec wanted $28 a share, and didn't look like Broadcom was going to be able to reach that level here. And we see that big drop down here. And this was an interesting other interesting chart here as well. The stock beginning of the summer here, April, May, was trading around this $24 range. After that last quarter earnings, big dip down to around $18, but started the trend up and had this big gap up from this 23 level up to around 25, 26 for a few days after that announcement came through, but coming right back down to that level, holding right now right at its 200-day moving average. So it'll be an interesting point on the chart here overall. Fidelity customers overall tend to like it a little bit heavier on the buy side today, about 58% actually taking this as a buy opportunity here for Symantec in the face of this drop. And option market too is looking a little more on the bullish side here as well. Calls about 54,000 to 42,000 put, with a little more call buyers, 19,500 versus 18,500 on the call buyers. So interesting too with the implied volatility level jumping up pretty healthily here today. Maybe obviously with that size of move, but looks like there's a few folks maybe still looking for an opportunity for that to bounce back, at least from the Fidelity side here as well. But that's what's got on our radar here today, and we'll be keeping an eye on.
Thank you, sir. That Broadcom Symantec one always struck me as kind of odd. I know Symantec has evolved beyond just Norton antivirus. That's kind of what they're most known for. But it just you sometimes see the corporate synergies when you see a deal like that, and that one kind of eludes me. But then again, I guess it eluded others too because it kind of fell apart. Interesting stuff out there. Let's see what's interesting out there in the land known as Maine, aka the options mecca of the world. Sir, we know you're not busy shopping at our national outlet of Amazon. So what is lighting up your tape over there today, sir?
Well, I'm watching. So the biggest thing I'm seeing is pretty low levels. I was just talking to a student about this. We got low levels of volatility, especially like VVIX style volatility, like vol to vol, pretty low. But we have massive future premium in the VIX future. So basically, that August futures hanging around the low 15s. VIX traded down to like 12, 20, something like that. You know, we're waiting for the Fed to do whatever the Fed's going to do, and we're waiting for earnings. But, you know, have you seen anything on the Chinese trade war negotiations? So, you know, once, you know, that stuff goes back to the back burner, and then all of a sudden, you know, vol gets pretty cheap again, and the S&P 500 is 3,000. So, I mean, I like the decay trade here in the vol products. I think you have to build a little bit of time into it, like 3-4 weeks. And you can hedge, puts are cheap in the SPY. So I think that is an interesting trade as far as, you know, where stocks are going. I mean, we're at, like TOSAW is going to say, well, I guess he can't say it today because we're down, 2 or 3 handles in SPX, but I mean, stocks are at an all-time high. So somebody must be liking something, and it looks like whatever short-term interest rates that were going up, that everybody's worried about in December, is not happening. They're not going to be doing anything with them until at least going in the upward direction until the Fed speaks and the trade war is done. So I think, since we haven't seen this much future premium in VIX, that usually sets up the potential for VIX to make lows for the year. That's generally what happens because the future premium gets really built up because vol traders don't like selling vol for nothing. So they leave the future premium relatively high as the cash just kind of sinks and SPX grinds up. So that looks like what the setup is as of right now. Also, all the stuff about Iran, oil prices are kind of sliding. So whatever Iran, you know, I don't think anybody took the bait, at least for right now. So that kind of turned out to be a nothing. So there's nothing really driving vol. So what generally happens is VVIX cash option volatility goes down in the vol products, but the future premium gets jacked up over the cash. Because I think a lot of traders I just be long and long vol futures, and we're going to write it out and see what happens. So I think that's what the setup looks like, and we will see if it comes to pass. So we have a couple of dates. I guess we got a couple of weeks with some sort of rate news, and I think that will take a big question mark out of the. We'll be like Mario Draghi. We will do whatever it takes to keep the economy booming.
Thank you, sir. And last but not least, Mr. Uncle Mike, sir, what is on your radar today as you are not indeed just to repeat, not shopping. So for the Amazon folks listening in on all the various channels, he is not shopping. Pick him up at your leisure.
So not shopping on Amazon. Yeah, that's true. So I think that with what we have going on right now with a 12 VIX, the upper 12 VIX, I should say, and we have names like Apple going back above the 200 mark. We have really not a ton going on right now. And so volatility is low, but at least for today, it deserves to be low because we're really not getting a lot of movement on things. I think that until we start to get some type of news, whether it's through earnings coming up, whether it's through some type of macro event that may or may not happen in the near future, or the threat of a macro event happening in the near future, whether it's through something that we do with our policy with China, whether it is the Fed lowering rates, whatever it may be, none of those things are happening right now, and it feels like the market is just kind of waiting for something to happen at this point. Markets like this can be very stressful from the standpoint that you're waiting, and it does not happen. Now, the good news about a market like this, or the good news, or the reason why I'm wanting to be or preferring to be long premium right now, is because if we do have something happen, if it's bad, well, we're at all-time highs or close to all-time highs. I couldn't quite say my thing today, but maybe if we would have broadcast the show in pre-market, I could have said my trademark.
I said it for you last week, by the way, on Friday on Volview. So just so you make you feel better, and on our options news rundown, because I figured you would feel bad if someone wasn't saying it for you. When we broke 27,000 in the Dow, I had to say it for you, sir.
Much obliged. So I think that when we have a market like this, if we're going to go down, we're at all-time highs. So, well, there's never been a better time to sell, of course, at an all-time high when the market's going down. But if the market does go up, I don't know if anyone's ever read the book Remnants of a Stock Operator by Jesse Livermore. And one thing that he always liked to do, he was, for those of you that haven't read that book, or not by Jesse Livermore, but it was about Jesse Livermore, arguably one of the greatest traders of all time. One thing that he always mentioned in his book is that a lot of times when a stock gets to the 100 level or to the 200 level, oftentimes it goes up rather quickly right away. Now, whether that happens or not, I'll leave that up to our audience to decide. But one thing that is happening right now is that we do have the biggest index in the world. The most popular one that the most people follow is the S&P 500, just crossing 3,000. And so on an all-time high, passing a key number such as 3,000, it can go up again pretty quickly. Now, whether Livermore is right about, or whether Livermore's reply to the S&P 500 remain to be seen, but what I'm saying is that I like being long premium in an environment like this, at least on the S&P, because if we do get some movement, I could see some movement happening pretty substantially if one of the things happens that the market thinks might happen but hasn't happened, so it's not doing anything yet. Hopefully that made some sense.
It did indeed, sir. And let's see. The markets aren't moving, like we said, a ton here. Let's see if anything's lighting it up. Coming into showtime. Oh, by the way, I thought I would put it out to our audience as well. Let them play along as well. A little bit of a flash poll here as we're doing the show. Just ask them, hey, have they done their patriotic duty? Have they pulled the trigger on a Prime Day purchase? We won't judge if you not want to shop on Amazon, you want to shop elsewhere. We won't hold it against you. As long as you made a purchase somewhere. Let's just see. And so far, our audience, we gave them three choices. Yes on Amazon, yes on some other outlet, or no. And so far, we're at 44% for yes on Amazon and 56% for nope. So maybe some group of Luddites out there in our audience, which is hard to believe, given how they consume our program, the formats that they use. But stay la vie. Let's keep on rolling here. Come into showtime here. Again, not a huge day, not a terrible day, kind of a day. We're seeing VIX doing about 240,000 contracts, ADV a little over 400,000, about 4.25. The SPX 650 ADV is about 1.2 million. SPY, the other S, the littler S, almost in a million contracts. ADV about 2.2 million. The Qs 215,000 contracts. ADV a little bit shy of 600K, and the Russell about $140 on the tape. 300,000 is the ADV out there. Our individual most actives here. Let's go to number 10 of our top 10. Ford 94,000. Number 9 Baba, getting a little bit of maybe that reflected Amazon level. By the way, Amazon not on our top 10, which is interesting. Again, this is a little bit before showtime, so maybe that has changed in the last half an hour or so. But Baba, $1.17 on the tape. Number 8, good old City, $1.17. They had earnings today. Number 7, Teva, $1.19. Number 6, Intel, $1.40 on the tape. Number 5, Facebook, $1.45. Number 4, Bank of America, $1.82. Numero 3, Tesla, $1.86. Number 2, Apple, $1.88. A rare. Another day out of the spotlight there for Apple. And number 1, AMD, wrestling the top spot away again, 208,000 contracts. And I know, Mr. Rock Lobster, you're not shopping on Amazon today, but you are doing a little bit of analysis in that sector, shall we say. What would you, if you had to say what your stock of the day is, sir, what would you say, sir? I guess he does not have one, listeners, because he has muted himself yet again. So he has lost his chance.
Oh, my God. I swear to gosh, you'd think I'd figure this out. So here's my closet pick, Walmart. Nobody likes it. As soon as Walmart got Amazon, I bought my first in the mid-50s, 2 summers ago. And I'm still trying to learn to use my phone too, by the way. So I'm trying to talk and look at the market at the same time. Sometimes I fail horribly on the multitasking. But Walmart is my pick. Why? Okay. All of a sudden, they are trying to become a internet distribution powerhouse. And last time I looked, they have a pretty big, brick and mortar footprint that everybody thought, oh, that wouldn't have any value. But, it's a massive company and it takes a while. But, I think that I was just going to go as the stealthy internet play coming, because obviously you don't get the valuation that Amazon gets. It gets a crazy multiple. But I like them. Low vol. The stock, ever since they started putting money back into trying to basically improve employee training and stuff like that, they took that one hit, and it's pretty much been up ever since while they try to grow their e-commerce footprint. And I mean, it's hard to think of a company with a bigger distribution and logistics expertise than Walmart does. So anyway, it's my sleeper pick. Amazon's a $1 trillion company, and unless and now they're starting to make pretty good money, so there's no question Amazon is going to be there, but I think there's room for other large players in that area. And as we all know, Walmart just keeps, they took down Sears, so they have a little practice at taking down, basically an entrenched business. So we'll see. We don't have Sam Walmart running the show anymore, but they seem like they're doing. So that's my pick. Just low vol call buying is it's just vol gets crazy cheap in there. So that is my pick on this Amazon day. You buy Walmart when Amazon Prime is going crazy, because that people are just going to be looking for that online alternative. Maybe it could be Walmart. You never know.
It is funny how they're both taking, fleeting steps into each other's territory. Amazon trying, failing, trying again with the brick and mortar stores. Walmart trying, failing, trying again with the online. They've had many different online services they've launched and scrapped. They had a movie service for a while. They bought Jet.com. They didn't mesh very well with those guys, and I think it started working out now. So all sorts of weird fumbling forays into each other's territory. But you're right, Walmart should be the beneficiary of a lot of this. Coming into today, it doesn't look like they're doing decent, somewhat volume. They're not actually as volume-tastic as you might think. They only average about 35,000. Again, we're kind of maybe on a little bit seasonally reduced level for that, but still about 35,000 is the ADV out there right now. So doing a decent chunk of that today, about 24,000 on the tape. Coming into showtime, let's see, how are we leaning here? Looks like Mr. Rock Lobster, the calls are leading the dance about 2-1 out there. So maybe people taking your advice, loving themselves a little bit of the call action out there. Speaking of some action, let's see what's going on in some of the weirder names. It's time to roll on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, let's get weird, let's get wild, let's kick things off. These are fun because the Rock Lops and I are kind of seeing these at the same time you're hearing about them, so it's kind of live and fun, fresh for all of us. Let's kick it off. Let's see what our Eye of Sauron is throwing out at us today. Let's kick things off here. It's not WeWork. The symbol looks similar. It is Work, WRK, a.k.a. Westrock Company. If you wonder what this is formerly Rock 10. That's an American paper and paper manufacturer. And then they merged with Mead back in 2015, and now they've become Westrock Corp. Ticker symbol WRK. So close to work, but not quite. About almost $36, $35.90 or so coming to showtime. Off about $1, so almost 3%. Let's see what this thing's been up to over the past year. Not a name I watch religiously. Let's see here. About a year ago, they were doing pretty well, a little bit better than they are right now. About 20-odd handles north of where they are right now. They're at about 57. Coming today, they're at about almost 36. So about 21 handles north of where they are right now. And they kind of stayed at that level until looks like about mid-September. Then they started selling off pretty hard. By mid-October, they were down to 42. And then they kind of bounced around there for a little while. Then they got down to 36 or 35, actually, back in, of course, Christmas Eve. And then they kind of have vacillated ever since, up to about 41 and change, and then back down to the mid-30s. And looks like I got as low. They hit their 52-week low back in, looks like late May, early June of around 32.01 to be precise. So they've bounced off that since. They're about almost 3 handles north of that, but not quite at the apex of their 52-week range either. Actually, quite a bit of ways from that. So let's see what lit it up on all of this back and forth drama here in the newly christened West Rock. We've got puts, the OCC30 puts lighting it up 2,700 times for 51.5 cents. Obviously, doing some splits there. These are opening over there on the Philly. The market was 50 at 65, so hitting the bid pretty much on these bad boys. These are OCC puts, so there's going to be earnings between now and October. The next earnings announcement is going to be on August 1st, so it's pretty near term. So they're going a little bit, actually a decent ways beyond the earnings if they were concerned about earnings. It seems like they want to just get that time range in there, and the earnings are incidental to that analysis. So hitting the bid 51 cents. Mr. Rock Lobster on the OCC30 puts. So, looking at this 52-week chart, you can maybe see how they're drawing that line there. If it does come to pass, if they break through it, they're getting it below the 52-week low. So maybe not the worst trade. If we go back a little bit farther, let's see. The other time they were at this level, anything close to that, actually below that, was about in February of 2016. They hit about 28. That was looks like their 5-year low there. So if you got it at around a little bit shy of 30, maybe not the worst trade there. What do you think about these puts out here in October, sir? OCC30 puts 2,700 times for 51.5 cents.
Not terrible. You know what? I hate selling puts like that don't generate, so you get a 1% return till October. Does that kind of sound?
It's not sexy.
Like the market. I guess the market's up 20% this year, so you're like, you'll be like, okay, well, we're lucky we squeak anything out of the market. That's kind of what you're saying to me on this, or at least I think that's like that line in the sand type of put. But it would be nice if we made a little more money, but it's not a very. I could see if you want to buy stock at 30 and buy the lows and stuff like that, that's perfectly reasonable, but it's a long time to tie up capital for 1%. You know what I mean?
I'm not like this. It's not. I think the OCC thing is what's throwing me off about that. I'm not liking that. You got to go all the way out to OCC just for 51 cents. If it was set, I could get behind it maybe a little bit more, a little bit less time.
I like August.
Yeah, exactly.
August.
Exactly. You need less time or more money, but something's got to tweak it a little bit to make it. Because you're right. It's not ringing my bells. It's not blowing up my skirt at all here, which I do wear a skirt when I do this show, listeners. Don't judge me. It's more comfortable. It's very hot here in the studio, and I am a little bit Scottish, as it turns out.
Well, was it? I mean, you could buy.
That's
AT&T
a visual I did
get
not
a dividend.
need.
You could buy AT&T and get that as a dividend.
Yes, I know. Exactly.
I don't know. It's just not.
We'll put that in the not sexy category for the Rock Lobster. No sexiness here. No more sexy here. As we keep on rolling here, let's see what else. Maybe we can up the sexy factor for you, Mr. Rock Lobster. I know the last dad of Krypton was just talking about this one. This is Symantec. They, of course, in that will they, won't they now, apparently won't they dance with Broadcom. Remember Symantec, they probably most infamously of the Norton. You get it pre-installed or pre-offered with every computer you buy these days. They do a lot of other stuff, but that's kind of their bread and butter. Symantec, ticker symbol SYMC, today about 21.60. You might not be surprised. They're off a bit, off about $4 or about 15.5% as a result of that deal. Not exactly coming to pass. This one's kind of had an interesting year. A year ago, they were exactly almost where they are right now. They were 6 cents away. They're $21.55 a year ago. They're at $21.61 right now. And in the interim, they sold off to about 18 and change in August, and they kind of ride back up to 22, then sold back off to 17 and change back in October, then rallied back up to 22. Seemed like they were pretty range down between pretty much the 17 range and like the 22 range. They broke it very briefly to the upside in April, got up to about 24, and then they sold off promptly again, back down to about 17 to change yet again back in early June. So it's kind of been nice range bound. So if you look into a little bit of a premium harvesting on this one, the range bound nature of it looks like it made a little bit of fun. Then it's popped up since since June. So I'm going to guess a lot of that seems to be probably, I'd imagine, the corporate action news lifting it up back to these lofty heights of 21, almost 22. Actually, yesterday it was 25, almost 26, and then it lost a lot of that juice. So interesting stuff here. Let's see what we got. We got puts, Mr. Rock Lobster. We've got. It seems like, you see 2020, you think that's super long term, but it's just next year. That seems like such a futuristic date that it just seems like it can't possibly be within only a few months. But indeed it is, such as the time flies. Jan 2020, 22 puts, going up 2,500 times for $1.75, a penny off the bid. These are actually fairly tight for Jan puts in Symantec. They were $1.74 at $1.86. You can work in that market for going that far out for a fairly illiquid name like Symantec and doing 2,500 to boot, getting them all done for a penny off the bid. Not bad. These are opening. Earnings are, again, the 1st of August, but not looking at earnings with the Jan put. So we got 2 in a row here, Mr. Rock Lobster, of looks like line in the sand puts. This guy is saying the heck with October. I'm going all the way out to Jan. He wants to do it at 22, so these are already in the money. So he's selling in the money puts in Jan for $1.75. Ugh, this one. Let me just say, my skirt is remaining at the level it was not going up at all, sir.
TOSAW just hid in the bathroom now. We've lost him for the show.
He's gone.
He's no longer Fidelity. They're pulling. Everybody's out. They're like, we're done. We've had enough.
A man can wear a nice. Let me call it a kilt. A man can wear a nice kilt in the comfort of his own studio. Can he not? Even if he's not even remotely Scottish, if he's 100% Italian, he can still wear a kilt.
Maybe Superman can save you. Maybe Superman will be able to save you. I'm not sure. At least there's something to this one. There's some, there's like 7 or 8%. What's the yield on that one? I mean, at least there's something on that put sale, So if they go out worthless, you make something, and you would be happy. Okay, if somebody said, all right, you're going to get 7% till the end of the year, take it or leave it. I think you'd probably say, okay, we're up 20% this. Right now, I'll take my 7% into the end of the year, and you could repatriate your dollars, all your long dollars from being gaga long this year, and you pick up. So it is not as underwhelming as the work trade, the WRK trade, I have to say. So it is a little better, but I have to admit it's still not. It is not like fluttering skirt quality. Yes.
So you're just sucked in by the larger amount of premium. That's all it takes to get you excited. Y'all get some juice. Get my juice for free. Or in this
something
case, for
a little juicier. I mean, I know there's a deal stock and it's here or there everywhere, and something might be going on, but
yeah, these puts could be $2 in the money by tomorrow. Yeah,
yeah, it could be $5 in the money by tomorrow. Like So I'm not saying it's a lock, but it's I don't know, a little bit. It has a little bit more meat on the bone. That's what we'll say.
We'll put these in the to be watched category. We'll come back. We'll see how our friend's line works. Let's see if the Rock Lobster is as in love with these in perhaps a few months as he is right now. Clearly, deeply, deeply in love. Let's move on to our last one. The name is almost cool, but not quite. Whenever I see this one, I get a little bit excited. Then I remember, oh yes, no, that's not what it is. That's not quite Marvel. It's Marvell, the technology company. I'm sure if you work there, if you trade it, it's very fun for you, but not quite as fun as if we're slinging stock on, of course, Cap and Iron Man and all that good stuff. Marvell with 2 L's coming into the show, ticker symbol MRVL. Of course, Marvel, the good one, part of the ever-acquiring Disney conglomerate now. But Marvell, still an independent beast, ticker symbol MRVL, trading today $26.15, up about 75 cents or nearly 3%. Let's see here. A year ago, they were trading about $21.15, so about $5 shy of where they are right now. They sold off a long, slow sell-off down to Christmas Eve, where they hit $14.41. So they sold off quite a bit over the course of the year. So 2018, not exactly a bang-up year for Marvell, pretty much down the whole year. And then looks like they turned around from there, and they rallied back up. By April, they were trading 25.5 again. So it's kind of a whole year of down and up again, and then they kind of have been in this kind of 25 to, looks like 22, back up to 25 again range over the past couple of months since then. And again, getting a good little pop today. I haven't seen if they had earnings today or what the news was. Let's see. Well, I'll look for that in a little bit while we're digging up. Let's first talk about what the activity is. And we got more puts. Looks like it's a trifecta of puts. I think it's been a while since we had one of those, Mr. Rock Lobster. 2,393 of the Nove 24 puts. So we were just talking Oct, then we went out to Jan. Now we're splitting the difference with Nove here for the puts, going up for $1.11. This time paper actually buying, it seems like, Mr. Rock Lobster. Lifting the offer, like I said, almost 2,400 times. These were $1.05 at $1.11. This is opening paper over there on the Philly. Let's see, Nove 24, so we're talking a couple handles out of the money here. Interesting paper here. I mean, this one has been below that 24 handle not too long ago. It was Christmas Eve, it was in the 14s, so 24 could be 10 handles to the good pretty soon. Still, this is an interesting one as well because this guy is obviously looking for a little bit of action and the downside, a little bit concerned to the downside here in the near term, probably a stockholder. What do you think about gobbling up some puts for $1.11 out in Nove, sir?
This one is don't you find that this is a kind of a cheapy put? A nice sort of, I like buying puts cheap. This feels like a little bit more of a savvy purchase on I remember trading this stock, I know, I always date myself, but forever ago. So it was kind of a little bit of a technology trader. It does move around. So I think this feels like not a bad low vol purchase for some puts, like a little back spread action. You get the 24 puts versus stock. You got a lot of potential movement with this one. So I think this is a very reasonable put buy long hold. My guess, though, is it's some kind of delta neutral type trade where they want some action out of this thing.
They want to get a little bit of a bang for their buck. Yeah, with these kind of trades, listeners, there usually is a stock leg. In fact, the last one we saw that had splits on at 51.5 and WestRock. Probably going to get that half, maybe doing some splits with the options or indeed try to play with the stock price a little bit there. So we'll see. We'll see. I put the semantic ones in the to-be watch. I don't think we need to watch these others, but we do need to watch what the heck Uncle Mike is up to. You got to watch that guy. So let's find out with a little bit of the old strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, Uncle Mike, sir. It is that greatest of holidays, a.k.a. Prime Day. I know your strategy of the day is probably going to be how to find that deal on the lightning deal before it expires. So have at it, sir. The floor is yours.
All right, true story. My 10-year-old daughter can't wait for school to start, and so she got her list of school supplies, and for probably the last 2 days, she has found the by far best deals between various places. I'm not going to reveal the names to find those school supplies. So my wife was ecstatic, and that she doesn't have to go do all the research, and our daughter found the absolute best deals. So I want to give a shout out to my daughter on finding the best deals for school supplies on that note.
She likes school. She should talk to my little guy, and maybe they could come to a meeting of the minds about something.
For sure. So what I want to go through today is what to do when you're long premium and the market's not moving. That's kind of a scary thing at times. So like I had mentioned earlier in the show today, I prefer to be long premium in a market like this because all of a sudden something crazy might happen. But the question then becomes, what if it doesn't happen? If the craziness, so let's use an oversimplified example. Let's say you keep most of your money in cash and you just have a small amount of money in some calls and the market does absolutely nothing, and then you feel silly because you wasted your money buying those long calls that expire worthless. Or let's say that you're trying to hedge yourself and you feel kind of silly because you feel you've wasted money on the edge. The market's just not moving. What do you do in a situation like that? Well, I think this is the place to where you can do a few things to help finance the cost of that long premium. Now, the first thing you can do is take a really small position. So let's say that normally you were going to put X percent of your portfolio into this long premium, but you're just concerned that it's not going to move for a while. But when it does, holy cow, look out. Then when that happens, if you have a smaller amount than what you would usually put into it, that is one way of doing it. Another way of doing it would be to buy options several months out instead of just doing a 1 month or a 2 month option. Go a few months out, because what that does is that locks in the lower volatility for that time frame. So that way, if the market doesn't do anything in 1 week, if you got a 1 month option, that's going to start to bite a little bit. But if you have a 3 or 4 month option, it doesn't quite hurt as bad. So that's another thing with which to do. The other thing that I want to emphasize with this is that you can still sell some premium at selected times when you're in a market that's not moving that much, just to kind of adjust to your current position. So let's say that you are long premium right now, and the market, and let's say you're just long calls in the S&P. If the market really takes a dive, then one thing that you can do is maybe you could sell a put spread as a way of time decay, help finance it. Sell it for a shorter time frame, and maybe just do something to collect some time decay on it. Now, at what the spread format, it might be a way to combat the long premium market's not moving blues. So let's say the market does go way up, and your calls are doing pretty well, but you still want to hold on to it. So yeah, what you can do is, let's say markets go higher and your long calls, but still not quite gone high enough for you to take profit on your calls. Perhaps sell another call spread, a vertical call spread for a shorter time frame. So that way you'll still have some premium working in your favor. And if the market continues to go your way, you're protected by the smaller spread, assuming you have the strike prices close enough together. So what I would recommend is just when you're long premium, yes, it's good in that you don't have as much money on the table, but you still need to be aware of the fact that you shifted risk and time decay is working against you, and be mindful of that.
We shall be mindful as we keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. It's Around the Block time. Time to tell you what we're keeping an eye on for the rest of the week. Everyone's chiming in about Amazon. Let's see how your voting is going first. Right now, coming in at the end of the show here, 57% saying yes, they pulled the trigger on some Prime Day purchases on Amazon. No votes for other outlets, which is kind of interesting. 43% saying nope. We got Kent Hall wanting to know if his screen is broke or if only $10 wide options in Amazon this week, $2.50 wide next week, and $5 after that. So I guess he's thinking he likes the tightness, as he puts it, of the markets. That puts it in a frame of reference for a $2,000 stock. What qualifies as tight out here. But, of course, we mentioned before, it is kicking off again this week. Not just Prime Day. That's the big thing, of course. But for all you traders out there listening to the show, and we know you are legion, earnings season back in with a gusto, with a vengeance here at Citi before the bell today. Got Wintrust and some other banks after the bell later today. Tomorrow got Wells Fargo, Goldman Sachs, Charles Schwab. You may have heard of some of those. We also got United Airlines, Johnson & Johnson, Domino's for all of you in the pizza realm out there. Wednesday, we've got Netflix, eBay, IBM, got PNC, BNY Mellon, U.S. Bancorp before the open there, Bank of America as well. Thursday, Softy, Intuitive. Also, I was into it. Skechers, Chewy, the one everyone's watching these days, Honeywell, Blackstone Group, a lot of big names there. Amex on Friday and a bunch of other names. So we're back. We're back in it, listeners. A lot to watch. Let's go around the horn. Let's start with the last dad of Krypton, a.k.a. Mr. Trey. Trey, sir, what are you and the Fidelity crew, what are you guys watching for the rest of this week until Thursday, sir?
Yeah, well, aside from lightning deals on kilts on Amazon, definitely earnings here are going to be our focus this week. So you mentioned a couple of big ones tomorrow morning, Goldman Sachs, JP Morgan, certainly keeping an eye on the financials and how they do. The one that, kind of intrigued by is Johnson & Johnson. Here, obviously, we've had a lot of healthcare in the news last week. It's been an interesting sector to keep an eye on. But, Johnson & Johnson had that, really rough day last Thursday after the Department of Justice probe mentioned, perhaps additional charges over the baby powder, which has kind of been this ongoing issue with Johnson & Johnson. But stock price took a huge hit, trading right now to 134.80, up a little bit here on the other day, but well below that 200-day moving average. Looking at the money straddle on it here right now, option market, look at about a $3.25 move on it. So we'll see where that takes it to the upside. Would take us back to right near our 200-day to the downside. Here. Right near this, 130, 131 mark, where we had some lows here at the end of May. So should be an interesting, always an interesting name, but with the recent news, be curious how that report pans out here tomorrow morning.
And Mr. Rock Lobster, same question for you, sir. What are you watching for the rest of this week until we can gather here together, at least for this show on Thursday? Lots of other shows in between now and then, but for this show on Thursday. Oh, and if you're playing the drinking game, that's your second shot, listeners, as the Rock Lobster forgets to
Oh my gosh, I cannot get this phone unmuted fast enough.
You're going to get our listeners drunk pretty quick, sir.
Well, because you used to complain I'm breathing, and you're complaining like I'm making noise. Now I mute. Oh, you know what, Kyle? Just cut all that, because it's all. It's just the mixer people are dying. What are we watching? You know what? Let's see how these earnings. I think you have big bank earnings, right? Early in the week. I think the banks always set the tone and want to see if this actually plays out as far as, I usually good, decent bank earnings, banks ain't making money or generally means they're making money. That means they're loaning money. They're doing banking stuff. Generally healthy banks are part of a bull market. So we've got big ones, Monday, Tuesday, Wednesday, Thursday, and we'll see. That's basically it. And I think if they're pretty positive, I think that'll set the vol tone for the week. We could see a low 12 touch, like a 12.10 or a 12.20 touch, a low of the year this week, if the earnings are decent. So that's what I'm looking at as far as this goes. And, of course, waiting for the Fed to do whatever they're going to do in a couple of weeks.
Which, if you look at the probabilities, is pretty much a done deal. It's just a question of degrees at this point. Last I checked, it was roughly 75% for 25 basis points and about 25% or close to it for the 50 basis points, which is looking a little aggressive, but we shall see. We shall see. And let's see what Uncle Mike is up to. Uncle Mike, sir, what are you watching for the rest of this week until Thursday when we get back together, sir?
Watching the same things that were just mentioned in terms of the Fed as well as earnings, but also watching to see if we get some type of a surprise. If we get good earnings and the president thinks, I have some S&P points to play with, so the market can pull back and it's still a good year, he might change some type of policy. Who knows? But those are the things with which I'm watching. Be prepared for surprises. They happen when you don't expect them.
Yes, that's the catchy thing and the tricky thing about surprises. It happens. At least expect them. Words to live by. Unfortunately, listeners, that music means we're done, at least with this program, but we're not done on the network, not by a long shot. Got more shows coming for you. Post-haste. But before we go back around the horn, see what everybody's got working that may interest you. Let's start in the land of the old hot seat, sir. If our listeners are intrigued by checking out all your Fidelity's most actives and what they're trading, maybe they want to call up you or the Last Emperor or Brian or all those other guys there and ask them questions directly. Where should they go? What should they do, sir?
Yeah, absolutely. Feel free to give us a call, 877-907-4429. I'd love to talk to you over the phone. You can also check us out online. If you go to Fidelity.com options, great overview of our options trading capabilities here at Fidelity and our platform. And, again, happy to talk to you over the phone, tell you about some of the unique classes and help you out with some of those tools as well.
There you go, listeners. You know where to find it. Fidelity.com/options. You got to be a customer if you want to call up Trey and the rest of the crew over there. So Fidelity.com/options is the place to go to do just that. Tell them you heard about them on our show. It'll be fun, and it'll give Trey a nice little lift there in the old office. All right. And if you want yourself a guy who can sit there and watch these boring markets for you so you don't have to, you can go out and do whatever the heck it is you want to do. Maybe you want to shop on Prime Day. You want Uncle Mike to watch your portfolio for you. Let him watch the paint dry. Uncle Mike, sir, if I want you to watch the paint drying for me, where should I go? What should I do?
Oh, by all means, come to the website, stcharleswealth.com, where even dry paint can become exciting paint.
Yeah, we always talk about, rolling your puts and everything, but maybe this is even more of a value-added service. You watch the boring markets so they don't have to, sir. Huh? How's that sound on your business card?
Oh, I like it. Watching boring markets so you don't have to.
The free branding advice here on this network, it's millions. I give away millions in freebies on a nearly daily basis. And last but not least, not much I can do for this guy because he can't even hear him half the time because he's muted. He's the Rock Lobster. Sir, if folks want to hear your webinars where you are silent for an hour, where should they go? What should they do?
I've got the mute open. I'm good. I can now talk. Go check out my vol newsletter, optionpit.com. Go look at all of our goodies, Gold, Platinum, Pro, and our Edge Hunter sheets where we actually pull in data and generate trades based on the vol edge. I know it's a crazy concept, but you can trade flies, buying strangles, time spreads, and actually trade the vol products themselves, all with a mind toward what your theoretical edge is on the outset of the trade. So we have those sheets. We sell them. Our clients like them. You need a little bit of education to use them, but what the heck? Life is short, so you might as well learn something new.
There you go. Get yourself a little bit of the old Andrew. And if you're not a fan of Andrew, don't worry. He'll be muted all the time if you go over there and sign up for their services. You don't really need to hear him. You can just sign up for his newsletter and you can just read his stuff. You don't have to hear him. So there you go. OptionPit.com is the place to go. And on behalf of the Rock Lobster and Uncle Mike and the last dad of Krypton, and indeed myself, I want to thank all of you for downloading, streaming, subscribing, for sending in all those great questions. Keep them coming. If you say you want more, you're not done, you're not sated yet, don't worry. We'll be back in about 29 minutes talking about all the crazy vol going on in the crypto world. And trust me, there's a lot of it, so stay tuned for that. In the meantime, we'll pump some good stuff for you if you're listening live. Maybe get a little bit of playbook in there, talking about some Bed Bath & Beyond and some Boeing calls and verticals and all kinds of good stuff. And get some of that for you. And we'll be back here in 28 minutes now, clock ticking, for a little bit of the old crypto rundown. Otherwise, we'll see you back here for this show on Thursday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.